If you enter in a trade and price immediately starts to reverse in the opposite direction, chances are you're caught in a reversal. This has happened to me plenty of times before I understood what market reversals are. So in today's video, I'm going to share with you how you can understand market reversals and how you can use it to make consistent profits in the market. So in today's video, I'm going to be talking about market reversals and why it's important to identify market reversals while in trading. And identifying market reversals really revolves around one thing, and that is the higher timeframes. Not understanding the higher timeframes will cause you to get stopped out on a lot of positions. I know a lot of you guys have been trading, and have you ever been in a position where you enter in right away and then it stops you out just for price to reverse to your original profit target? And that is based off of the higher timeframes, and being able to identify the higher timeframes will allow you to take those higher probability trades because you're trading within the trend in order flow. So understanding where the liquidity is resting is also very important when placing trades, because liquidity means there's a lot of volume around those levels. There's a lot of injection of liquidity, and that is based off of the higher time frame. So when we're placing trades, right, we always want to see where those higher time frame levels are so we can trade around those levels to give us the high probability trades. So the lower time frame pattern may be good, but if the higher time frames don't align, the trade's not going to work. You might be on the lower time frames and you see a very nice pattern setting up, but if the higher time frames don't align and you don't have a higher time frame thesis, then it's not going to be an A+ trade. What makes an A+ trade is being able to identify the higher time frames and be able to build a thesis around that. And that brings me to the fact price can only do one of these three things. So price can either have continuation, consolidation, or a reversal, right? These all happen at key levels on the higher time frames. As I mentioned, these key levels, there's a lot of liquidity resting around these key levels, key interest points on the charts. So these are very important key levels. To help identify what's going to happen out of the three, where you have to use a combination of price action, understanding market structure, and to react what the market is doing. So how do we trade reversals? First of all, it's based off of the higher time frames, right? So the key liquidity levels on the higher time frames, and then you also want to be looking for higher time frame patterns for reversals. So different types of higher time frame patterns are head and shoulders, double tops, you have inverse head and shoulders, so many different types of reversal patterns that can indicate a potential reversal in the marketplace. What I also like to look for when trading reversals is I like to look for sweeps of liquidity, I like to look for market structure shifts and retests. And I also mentioned when trading reversals, right, we have to react to price action around the key levels. This is one of the most important facts, right? If price is indicating weakness on the higher timeframes around key levels, that's most likely going to indicate that on the lower timeframes, we're going to have a breakage structure and we're going to reverse on the lower timeframes. So reacting to price action around these key levels is one of the most important factors when it comes to trading. Now, let's go into the examples that I have for us today. So right here, you can see this is my first example here on Tesla. And if we look at the daily chart, you can see that we're in a very clear downtrend, right? So we have a clear downtrend. We have a gap down in the market due to earnings. And now what do we have? We have consolidation, right? So we essentially push back up into this gap level, end up coming down, sweeping this low, break structure back towards the upside, and now we're essentially consolidating. So after consolidation, what's most likely going to happen? Are we going to have continuation towards the downside, or are we going to have a potential market reversal? So as you can see here, if you go onto the 1 hour chart here, you can see that what do we have right here? We have an inverse head and shoulders. You can see right here, we have an inverse head and shoulders pattern. So coming into this day, right, I'm going to be looking for bullish momentum, right? Inverse head and shoulders is a bullish pattern towards the upside. So we have clear targets towards the upside being this gap level. So coming into this day, I'm going to be looking for longs in the marketplace. So as you can see right now, we're on my 5-minute chart. You can see that price on this day was trending towards the upside, and we had a bunch of news in the after hours which came up at this gap level towards the upside. But you can see right here, price coming into the pre-market, we're consolidating right above previous day high. So as long as we can hold this previous day high level, I'm going to be looking for bullish momentum towards the upside on Tesla coming into the day. So now I am on the 1-minute chart, and you can see right at open, right, we're opening up right around previous day, and you can see that we have a strong reaction. We see a body comes down, right, the wicks come down, we wick right around this 188 level, which is this previous day high, and you can see we have a strong reaction right off the level, and that's where I ended up going long right here after the candle closure with the stop just to break below that. And my targets in this case was all the way up at number 1. First target was pre-market high, right here. First target was pre-market high, and then my second target was at 194 level, which was that gap level on the daily time frame. So we'll play the tape here. You can see price gets above. I end up scaling a couple contracts right here. You can see get a reaction. We quickly get above it, and now we're coming back down. towards this 1 minute order block. You can see price holds that perfectly. And now we continue towards the upside, towards our final profit target being that 194 level on the higher time frames. And you can see right here, we end up getting hit, and that's where I take off my full position. So that was a nice reversal trade towards the upside on the higher time frames, right? So we had the inverse head and shoulders on the higher time frames, and that allowed me to give me a bias coming into the day, and that allowed me to take that opening drive play towards the upside on Tesla. So now I'm going to be going on to my second example that I have for us today. So the second example I have here is on the ES futures chart, and if you strictly just look at this in the past 1 hour, right, you can kind of see that we're just in a consolidating market, right? We're not bullish, we're not bearish, right? But we don't have a clear edge on what's happening just based off of the 1 hour chart. But if we quickly zoom out to the daily chart, we can see that if we look at this trend, right, we're in such a bullish trend on the daily time frame. So there's no need to look for short positions, right? You can see that we're such in a clear uptrend on the daily chart. So if we go on to the 1 hour time frame now, based off of this information, right, we can use this order block as a potential area for price to continue towards the upside. So you can see right here, we have a downtrend on the 1 hour time frame, but what we're coming down into is a bullish order block on the 1 hour time frame. So with this information, we can potentially look for market structure shifts and reversals back towards the upside on the ES. So if you go into the lower time frames here, you can see that we tap into this order block, and now we have our market structure shift back towards the upside. You can see right here. So we have our market structure shift, we have our downtrend break, we tap into the order block. So now we're going to be looking for long positions towards the upside. And now what we're going to do is look to place longs where? We're going to be looking to place longs back at this retest level. So if we can have a retest of this break of structure level, we're going to be looking to target the upside, being that all-time highs level. So as we play the tape, you can see that we end up getting the retest here, and now we're continuing towards the upside. So we tapped into the 1 hour order block, we broke structure on the 5 minute time frame, and now we're going to be looking for a retest of the order block. And you can see we get the retest here. That's where we look to enter, and you can see that price ends up just continuing towards the upside now because we're in a bullish environment. And you can see that price just keeps on gravitating higher and higher. And bam, right there. As we played the tape, it took a while, but you can see that price strategically moved its way up all the way back up towards that all-time highs level. So you can see that we had bullish price movements on the daily chart. We went onto the 1 hour chart. We saw the 1 hour was in a downtrend. We ended up breaking structure on the 1 hour time frame, and we ended up looking for that retest on the lower time frames to get our entries, and we ended up targeting that all-time highs level on the daily chart. So that ended up being a perfect example of how to trade market reversals. So now I'm going to be going on to my final example that I have for us today. So you can see right here, we're on my final example of the day. Obviously, we can see the structure on the NQ. We are very bullish, but look at how big of a move we have on the NQ, right? Once we have this big a move higher, and we're looking to target this all-time highs level, what's most likely going to happen with the NQ? Are we going to end up just continuing higher? No, that is very unlikely. The reason being is because if everyone's down here that bought down here, they're going to be looking to target some sort of liquidity levels, being this and this all-time highs level. So what's most likely going to happen is we're going to get some sort of reaction around that all-time highs level. So as you can see right here, we're on the 1 minute time frame coming into market open, and you can see we have a big push towards that all-time highs level, right? And what do we create? So we create an imbalance here, which also coincides with a all-time highs level. So you know this is a very key level. So as you can see right here, we get above this level, we're going to be not looking for longs because we're already so high up on the 1 hour time frame. The risk reward would not make sense for long positions here. So if we're going to look for reversals, right, what we want to see is a break of structure on the downside. We want to see a retest of this level where you can potentially look for shorts towards the downside. So as we play the tape here, right, you can see that price bounced off this retest level, went above, but now you can see we're closing below this retest level. So now I'm going to be looking for a retest of this key level where we potentially shorted towards the downside. You can see right here, we end up breaking structure on the 1 minute time frame. We're coming back up for a retest of this level. So that's where you're going to get in for your low risk shorts, right? You're going to get in right around this imbalance, right? Which uses as an inversion. We're going to also have a retest, and we're going to look to place stops at the highs. And then in this case, right, where are you going to target? You're going to target these liquidity levels all the way down here. So we place this trade on, you can see we get tagged in, and I would play the tape. You can see price has a very nice reaction off that retest level, and then we methodically just keep making its way down towards the downside. And bam, right there, you would have taken your full position right off there at those pre-market lows, and that would have netted you a very nice trade for the day. And that's how you can use market reversals, basing it off of key levels in the higher time frame charts. I hope you guys enjoyed that video. If you did, make sure to drop me a like and subscribe, and I'll see you guys next week. Peace.